Hello and welcome to ET Now. Very good morning. You're watching Market Cafe with me, Kanishka, Sarkar and Snehi, Shah, a show where we'll get you all the global and local news updates and also tell you about the stocks to keep on your radar today. First up, let's get going and tracking the global markets. An eye on the Wall Street first. Well, the Dow, that jumped more than 300 points, and the S&P 500 in fact set a new record after a better than expected June jobs report. That fueled optimism that the US economy, which was is hanging tough despite that fast-changing trade policy and geopolitical environment. Now, the Dow Jones Industrial Average, that advanced over 340 points. The S&P 500, that at about 0.8%, whereas the Nasdaq Composite, that gained more than 1% yesterday. Both the S&P 500 and Nasdaq, as I said earlier, closed at record levels. This came as the non-farm payrolls data rose by 1,47,000. Now, that's above the Dow Jones forecast from economists for 1,10,000 and an upwardly revision from 1,44,000 in May earlier. Now, the unemployment rate, that also fell to 4.1%, whereas the economists, they had projected an increase of 4.3%. Now, the strong jobs report also spurred a spike in treasury yields and reduced expectations for the Federal Reserve to cut interest rates soon. Now, Thursday, as I remember, Thursday was a shortened trading session with the New York Stock Exchange and the Nasdaq closing at 1 p.m. That is, it was a half day, and the markets will remain closed today for Independence Day. Now, if you look at the weekly moves, all three major U.S. averages closed out the week in the positive territory. The S&P 500 and Nasdaq, they were up about 1.7% and 1.6% on week, whereas the Dow, that posted gains of more than 2%. But Snehi, how are things looking on the commodity front?
Well, absolutely flat, Kanishka, if you could call it that. Hi there, good morning. If you take a look at what the crude indices have done overnight, it's not been all that much. And you have good reason behind that as well, because you have a lot of cues coming in from the US and non-farm payroll data like Kanishka mentioned. So if you take a look at what oil has been up to, you have WTI, that's absolutely flat at $67 per barrel. You have Brent, that's also at 68.7. So the gap, in fact, that we're seeing between WTI and Brent seems to have narrowed tremendously. And oil has eased on US tariff uncertainty and OPEC plus output expectations. Remember, this 9th of July deadline is largely still looming on countries that are trade partners with the US, but have not heard any significant deals as of yet. This week, we've heard a US trade deal coming in with Vietnam. Earlier, we heard the same with UK as well. So all eyes are going to be on trade deals with India, Japan. So all of this is going to be majorly in focus. And more important for this in terms of the oil market and what could be setting the momentum over there, you have the OPEC plus meeting. The OPEC plus countries are going to be meeting on the 6th of July, and they're expected to hike output by 411,000 barrels going ahead. So at least that is the take on crude and oil, and that is what the commodities have been up to. But if you shift focus back home and take a look at how yesterday's trading session was, well, our expiry was anything but exciting. Very lackluster expiry is what we've seen on D Street yesterday, because if you take a look at how the Nifty has shut shop, we managed to cross that 25,400. We managed to close above that, but barely. So 25,405 levels is where we have crossed yesterday. 0.2% lower on the Nifty. Similar moves coming in for Sensex. You have India VIX that cooled off further 0.5%, so no complaints there. Nifty Bank also almost 0.4% lower. It was names like Apollo, Dr. Reddy's, Hero Moto, ONGC, Maruti Suzuki that held on to the gains on the Nifty 50 pack. On the flip side, you had financials that were largely lagging on the back of a negative note coming in from Macquarie on IndusInd and Kotak specifically. Kotak Bank, one of your top Nifty 50 losers, was down 2%. SBI Life, Bajaj Finance, Bajaj Finserv, you had all these financial names that were making up the list of losers on the Nifty. Sectorally, good day coming in for auto, pharma, FMCG and energy. On the flip side, big losing moves coming in for PSU banks, metal, realty, Nifty Bank and Nifty IT. So while we have managed to close above the 25,400 mark, the key support levels today are going to be 25,250 on the bottom and anywhere around 25,500 and slightly higher than that on the resistance. But our technical experts whom we interacted with yesterday at market close are not expecting much excitement in the markets today as well. They're expecting this to mirror yesterday's move. So well, that is the market setup for today as well, Kanishka.
That's right. So that's how the markets are looking when it comes to the Wall Street, the commodity market, and the cues that we are tracking from the D Street yesterday. But to discuss this further and see how the global setup is looking, we are now joined by Peter Cardillo, who's the Chief Market Economist at Spartan Capital Securities, to help us decode the market setup. A very good morning to you, Peter. Now, let us start by talking about the US markets first. Now, they are at a record high, both the S&P 500 and NASDAQ at record levels. So now, from here on, where do you see the movement? Is the rally going to continue, given we have got a better than expected June jobs report as well? Or do you see, a case for a potential breather, given that that tariff deadline is looming for July 9th?
Yeah, well, to begin with, I think, the market is in the midst of a summer rally, and it's probably going to continue. We had good news with the jobs report, although if you really look at the jobs creation, the government led the pack here in hiring, and so you had 147 non-farm jobs that were created. Half of that was because of government hiring, and so if you take that away, the report really is not as strong as it appears on the surface. Although the total unemployment ticked down to 4.1%. And the good news of the job market was that the hourly wages continued to move up in a very modest way. In fact, they came in better than expected, 0.2%. So basically, it alleviates some fears in terms of perhaps of a contraction in the jobs market, as we saw with the ADP, that is the private sector, that showed that jobs had that the private sector had contracted, and that was mostly due to, of course, fears of the tariffs, and so hiring from the private sector basically was weak. Now, this also takes away the fact that the Fed is not likely to cut in July. And again, even though the inflation news continues to improve and looks good, the fear factor of tariff inflation is still very much on the minds of investors. So this leads us to the next question, and that is, why is the stock market performing well? Well, it's performing well because in a week or so, we'll be heading into second quarter earnings, and we believe that they're going to be strong, and they will be in line with market expectations. So that's the fundamental reason for the market's rally that will probably continue. This summer rally, of course, could take us to higher levels.
Well, all right. So, Peter, that's your take on the entire US market. And of course, today the markets will be closed on account of the 4th of July Independence Day celebrations in the US. But, Peter, give us a sense of what you've made of the bond market in the US lately. Just yesterday, we've seen a little bit of an uptick coming in the 10-year yield. On the flip side, you have dollar index that is absolutely lackluster and not doing anything. On the basis of these two metrics, how do you think the road lies ahead for the US markets?
I'm having difficulty hearing that the last part of the question. I think what you asked me was, now that the tax bill is that is Trump's big beautiful tax bill has been passed, and now we're waiting for his signature, what will that mean? Well, again, that to a certain degree, in terms of the stock market, it's positive. Obviously, you're going to have lower corporate taxes, and that means that companies will be able to earn more going forward. Of course, there's a negative aspect to that, and that negativity comes from the fact that it's going to add a couple of $1 trillion to a very huge deficit. So soaring deficits are not going to diminish, they're going to increase. And so that indicates that we'll probably have a weaker dollar. Dollar probably will continue to weaken, and that means that gold prices are likely to continue to move up strongly.
All right, that's the day coming on the Trump's big beautiful tax bill. But Peter, now let's also talk about some other asset classes. Now, the kind of rally that we are seeing in U.S. markets, June has been a very strong month for the U.S. equity market. Overall, 2025, the first half has been quite strong as well. We recovered from those April lows. But going forward, since that you said that the market looks fundamentally strong, given those strong earnings that we are expecting, what's your take on other asset classes? Do you think it's time for one to move their money from other asset classes like gold and shift back to equity?
Yeah, I remain very bullish on gold, and I think, as I said, it's just a matter of time before we hit new record highs. I think somewhere down the line we're looking at $5,000 for gold prices. That is, of course, not immediately, but I think we're headed for that, and that's based on deficits, and so we just, of course, there's the possibility that the economy strengthens, and of course, there's the possibility that we'll have trade deals that won't have very large implications in terms of inflation. But I don't see that. I think that the trade agreements will bring a certain amount of inflation. So that means that the Fed is not likely to be as generous as perhaps the market would like it to be.
Okay, so that's your take on what the Fed could go ahead, could do going ahead. But Peter, I just want to take that point a little further. Now that this bill has been passed, and you also have on the other side this entire tariff threat that is still upon some countries that have not heard trade deals coming in. Could this tax bill influence the Fed to maybe slightly deviate from the path that it was going to take earlier? Because we're still hearing commentary from Fed presidents, the likes of Raphael Bostic, that are saying that they are still not rushing to give a decision in either direction. Do you think that this tariff pressure could maybe quicken that timeline for the Fed?
I think there's a possibility of that, but we just have to take a wait and see attitude and see what develops in the coming weeks and months. But again, there are still major trade deals that have to be agreed upon, and so it's still an open question.
All right. Peter, now I just want to go back to the point you were making earlier about inflation. Now, you have earlier said that, it has been trending lower, it's been improving, but it still remains sticky is what I was reading in one of the reports. So if you could help us understand what are the drivers of the stickiness and what needs to be done now to move away from this point and reach that Fed's target of 2%.
Can you repeat the last part, please?
I was saying about inflation, what do you think needs to be done at the Fed's end to reach that 2% target?
Yeah, I think, we're probably going to hit the Fed target, but not right away. I think now with the budget being passed and with trade deals still having to be sealed, I think that inflation will continue to hover around the present level, which is not bad. It's come down, so that does leave the door open to a rate cut. But perhaps, as I said before, I don't think the Fed is going to be as generous as the market would like it to be, or actually as the administration would like it to be. So Yeah, it's just a question of waiting and seeing from the from the um, um, trade agreements and how the how inflation will pick up in what certain sectors. Now, there has been some evidence that some of the uh, some of the um, tax levies are now beginning to show prices that are now beginning to, well, we're now beginning to see prices show up. So far, it's been contained, but the question is, will it stay that way? And my guess is that we're probably going to see a little bit of a bump up in inflation in the months ahead, but nothing that would take us too far away from the Fed target. So it's going to be a while before we hit that 2% Fed target.
Okay, so that 2% Fed inflation target still looking slightly away, but an uptick is what we can expect, not too concerning. On that note, Peter, we'll let you go. Thank you so much for joining us. Always a pleasure interacting with you.
Thank you for having me.
Well, let's move on from that, and now let's throw some light on the world of F&O. And Pulkit is joining us with all the details on how the F&O segment is shaping up. Pulkit.
Good morning, Snehi. So if we talk about the F&O setup that has built from the after the last expiry, that was yesterday. So India VIX is around 12.38 in a comfortable range. No need to worry about it. For put call ratio, for Nifty it is 0.73 and it is again a comfortable range. And today how the market will move, it will change accordingly. And this is the weekly expiry PCR. For Bank Nifty it is 0.92 and it is for monthly expiry. If we talk about the change in open interest for index futures, it is minus 2.73% and the trend is long unwinding. For most active options, for Nifty call, it is 25,500 and for put as well, it is 25,500. But the thing that needs to be noticed here, the trend is call writing and for put, it is put buying. So it is showing some pressure, but after the market will open and how the market will move, it will obviously change. So we will update accordingly. For highest open interest option, for highest option open interest, for put it is 25,000 and for call there are two strike prices 25,500 and 26,000. Since the difference is very less in open interest, so I have taken both the strike prices. For Bank Nifty, change in open interest for index future is minus 3.16% and trend is long unwinding. For highest open interest for both put and call, it is 56,000. If we talk about the long positions, for FII, it is around 29.29%, which has reduced around 400 basis points from the previous day. For DII, it is 64.01%, and for retail, it is around 54.88%. If we talk about the securities that are in F&O ban, so only one security is there, that is RBL Bank.
All right. Thank you so much, Pulkit, for getting us that F&O snapshot. But moving on, let's also talk about some of the stocks that are likely to buzz in today's trade. Rabinder is joining us with just that list.
Whereas lots of stock that can be in focus in today's trading session. Firstly, let's start with ONGC, where company said that the ONGC and Mitsui OSK Lines Private Limited Japan has signed a head of agreement to enter into a partnership to build, own and operate two very large ethane carriers, and the VLEC shall be shipping imported ethane to ONGC Petro Addition Limited, a subsidiary of the ONGC, for capital use of a feedstock. Apart from this, Reliance Industry can be in focus, where Reliance Retail Venture has made a strategic minority investment in the UK-based Face Gym to bring its innovative facial fitness concept to India, and Reliance Tira will lead the brand India's expansion via standalone studios and select Tira stores over the next 5 years. Apart from this, Torrent Pharma can be in focus on back of acquisition, where company has said that the company will acquire additional 2.41% stake in JB Chemicals, and the cost of the acquisition will be 620 crore. Moving to next, on back of production release for the June quarter, Vedanta can be in focus, where company say that the record quarterly aluminum production of 587 KT, which is up by 36% 6% on a sequential basis, and Zinc India's records its highest ever mined production of Q1 at 265 KT, which is up by 1% on an annually basis, and power sales was increased by 11% on a sequentially basis. So back of this Q1 update, Vedanta can be in focus. And lastly, Jindal Steel and Power can be in focus. The Jindal Steel announced a significant milestone in a strategic growth journey, and the government of Odisha had issued a letter of intent to the company for the grant of 50-year mining lease for Roida 1 iron ore and manganese block located in Khenjor district, spread across 104.84 hectares. So back of this, Jindal Steel and Power can be in focus.
Thanks for bringing us that list. Clearly, lots of stocks to watch out for. It may be Friday, but well, the markets are going to be important to watch because a lot of stock-specific action is what we can expect, especially on the back of all the Q1 updates that we've seen trickling in post-market as yesterday. But while we're taking a look at what to watch out for, back home on the macroeconomic front, not much is happening. Similarly for the US, because the US markets are closed on account of their 4th of July Independence Day. So you have equity and bond markets that are both taking an off today. So it's a long weekend coming in for the US. But if you take a look at some other macroeconomic cues that are going to be important to track, you have PPI numbers coming in from Eurozone and household spending data coming in from Japan. So watch out for both of these. But shifting focus back home, if you take a look at the stocks that are going to be in focus on the back of either corporate action or board meetings, first up, watch out for Concor, which is Container Corporation of India. That stock is going to be trading ex-bonus today in the ratio 1:4. So we'll see how that stock performs after getting adjusted in today's trading session. But other than that, if you take a look at the stocks that are going to be in focus on the back of corporate action, then you have a whole bunch of stocks that are going to be trading ex-dividend today, likes of Tech Mahindra, Axis Bank, Bharat Forge, Biocon, Central Bank, you have M&M, and that list goes on and on. So watch out for a whole bunch of these stocks that are trading ex-dividend today. In terms of AGMs, all eyes are going to be on Tata Power because that company will be holding their annual general meeting today. And in terms of other events, you have ECB Governing Council member Francois Villarão-Tegado, who's going to be speaking. So watch out for that and any important cues from that commentary. So well, yes, keep a close eye on all of these cues to watch out for in today's trade.
All right, then those are all the cues we'll be watching out for later in the day. In fact, a lot of stocks to watch out for on the D Street today. But let's get tracking the Asian markets as well. Now, if you take a look at the Asia Pacific markets, they are trading mixed after a strong session that came on Wall Street after that strong June jobs report. In fact, remember Wall Street gained on a better than expected June jobs report, and that has eased investor concerns of a slowdown in the US economy. Now, tracking those tracking the Wall Street. Now, let's take a look at how the Asian peers are faring. Now, China's Shanghai index, that's trading nearly flat with a tinge of green. On the other hand, we have South Korea's Kospi index, which is up nearly 0.7% as this Shanghai is actually up nearly 2% at this point. Then we have South Korea's Kospi, which has gained 0.7% at this point. Then Japan's Nikkei, on the other hand, that's also trading in the green with 0.2% gains coming in at this point. But Hang Seng, on the other hand, Hong Kong's index, that has been trading lower with losses of 1% coming in. Let's also talk about how cues are looking for the Indian market. Now, the Nifty ended around those flat levels of 25,405. But if we take a look at how the GIFT Nifty is faring, a fairly flat start is what we are expecting at this point in time. But on that note, let's go across and slip into the news.
The latest on a developing story because SEBI has barred Jane Street Group from accessing the country's security market, citing an order the regulator posted on its website. SEBI said that Jane Street Group entities are restrained from accessing the securities market and are further prohibited from buying, selling or otherwise dealing in securities directly or indirectly. We have Ankur who's joining us on the phone line to bring us up to speed on everything that's been happening on this matter. Ankur, morning.
Good morning. Yes, a big order coming in for Jane Street, and in fact, SEBI has estimated that Jane Street Group made illegal gains worth rupees 4,843 crore through alleged manipulation, and this notional profit of 4,843 crore flagged in SEBI's interim order as a prima facie violation of norms. So overall, SEBI has passed an interim over manipulation charges, and it has happened. The allegation is that manipulated bank nifty on expiry days. SEBI has flagged intraday index manipulation and extended marking of the close strategies. And the company actually built short options while some expire futures. And this happened after there was a conducted by market regulator national. Yeah, and this group actually therefore earned 43,289 crore profit in happened January and March 2020. However,
All right, thank you so much, Ankur. I think we are unable to hear you a little bit. We'll patch you again in some time. But thank you so much for getting us up to speed with the latest that's been happening with SEBI barring the Jane Street from Indian securities market. But shifting focus to a very special initiative now. Now, the beginning of the month often marks key financial activities, salary credits, bill payments and planning expenses. But just as we plan for our expenses, it's equally important to plan for our investments. Now, to encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative. Bharat Nivesh, Behtar Nivesh, Behtar Kal. Now, the objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. Now, as part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones.
Okay, well, and let's move on from that. And the Tamil Nadu government is casting a wide net with plans to boost seafood exports, setting a bold $5 billion target. State government is eyeing major investments in processing, cold chains and shipbuilding. My colleague Jude is now joining us with more details on this. Morning, Jude.
Tamil Nadu is targeting a whopping $5 billion in seafood exports in the near to medium term. That's the word coming in from the state's industries minister, T.R.B. Raja, who said it was his plan to make the state a quote-unquote global seafood hub. Now, how does he plan on getting there? First up, build more logistics, cold chain storage, processing and packaging facilities, enhance income streams for Tamil Nadu's fishing community, and last but not the least, also enhance shipbuilding measures so as to ensure that the state can leverage on its long coastline. Now, the opportunities and the potential for growth is aplenty. For instance, Tamil Nadu's seafood export numbers have been on a growth trajectory, growing from about $455 million by way of value in FY21 to a whopping $577 million in FY23. There was a bit of a blip granted in FY24 on account of a surplus in Ecuadorian shrimp supply, thereby impacting the global seafood export market. But the state, by and large, is on a growth trajectory of sorts. There's also ample growth potential insofar as Tamil Nadu competing with a neighbor like Andhra Pradesh, who has a whopping $7.38 billion in seafood exports. The state is also looking to leverage on its long 1,076-kilometer coastline so as to ensure that seafood operations and fishing operations happen by and large along this coastline itself, so as to ensure that it competes with neighbors like Andhra and even a state like Gujarat that are far ahead in terms of seafood exports are concerned. Remember, Tamil Nadu also exports products like shrimp, cuttlefish, squid and dried fish, with shrimp accounting for 77% of its total seafood exports. However, there are challenges. Remember, the US's reciprocal tariffs mean that there's a 26% tariff on Indian seafood exports, which could potentially impact a $2.5 billion seafood export business, in stark contrast to Ecuador, which is seeing only a 10% tariff imposed on its own seafood exports. But the fact remains that even despite these challenges, the state is looking to hit the accelerator as far as its seafood exports are concerned and travel yards as it hopes to leapfrog competitors like Andhra Pradesh, targeting that number of $5 billion by way of seafood exports in the medium term.
Jude, for getting us that latest on the growth potential of Tamil Nadu's seafood export market. But moving on and shifting focus to Delhi then. Now, in a significant move, Delhi Environment Minister Manjinder Singh Sirsa has formally written to the Commission for Air Quality Management, urging them to suspend Direction number 89, which barred fuel supply to end-of-life vehicles, petrol cars older than 15 years and diesel vehicles older than 10 years. Nivedana is now joining us with all the details.
Public backlash has forced a major development in the national capital. The Delhi government has put on hold its controversial fuel ban concerning all petrol and diesel vehicles classified, remember, as end-of-life vehicles. The rule had barred fuel supply to petrol vehicles over 15 years and diesel ones over 10. But within days of the rollout, which even we reported here on ET Now, it triggered massive outrage. Now, Environment Minister for Delhi, Manjinder Singh Sirsa, called the ban difficult to enforce due to technological challenges and complex systems. He admitted the ANPR cameras meant to flag vehicles were flawed, unable to read high security registration plates with faulty sensors and speakers. In fact, Sirsa also questioned why the rule was imposed only in Delhi when it hasn't been enforced in Gurugram, Faridabad or Ghaziabad, pointing out what was essentially done by the previous Kejriwal-led government. Meanwhile, let's tell you, we're also concurrently looking at a legal development as well, because Delhi petrol dealers moved the Delhi High Court, calling the penalties arbitrary and disproportionate. The court has now sought responses from the Delhi government and CAQM and said dealers can report any action taken against them during the proceedings.
There is a public discontent and outcry. In these said circumstances, it is not feasible to implement this system where fuel is being denied to EOL end-of-life vehicles identified through ANPR installed at petrol pumps in Delhi. हम उनको जानकारी दी है कि इसके चलते ये इस ANPR को इम्प्लीमेंट करना, इस सिस्टम को इम्प्लीमेंट करना अभी फिजिबल नहीं है. इसलिए जो बाकी स्टेट्स के अंदर जब आप बाकी जिस तरीके से NCR के अंदर जब आप इसको इम्प्लीमेंट करेंगे, साथ साथ में तब तक हम भी अपने आप को टेक्नोलॉजिकली इसको जानकारी लेकर इसको अपग्रेड करके इसके टेस्ट करके इसका एक्सपीरियंस और एक्सपेरिमेंटल तौर पर भी पूरी जानकारी लेके एक पूरा सिस्टम रोबस्ट हो जाए, उसके बाद ही इसको भी हम भी इम्प्लीमेंट करने की स्थिति में होंगे.
Delhi High Court has restrained Patanjali Ayurved from airing ads that allegedly disparage Dabur's Chyawanprash. The interim order came on Dabur's plea, which flagged misleading comparisons in Patanjali's commercial. The court agreed the ad made generic and targeted claims that could harm Dabur's product and the entire Chyawanprash category. Nivedana is joining us once again with more details on this. The Delhi High Court has restrained Patanjali Ayurved from running disparaging ads against Dabur Chyawanprash. Justice Mini Pushkarna, while hearing a plea filed by Dabur, passed an interim injunction stating that the ads in question appear to target Dabur's product specifically, while also making generic derogatory claims against other Chyawanprash brands. Now, according to Dabur, the ad falsely claims that no other manufacturer has the knowledge to prepare authentic Chyawanprash amounting to generic and specific disparagement. To label other brands as ordinary is both misleading and harmful, is what Dabur contended as well. The petition also flagged misleading comparisons involving Dabur's product, which is classified as an Ayurvedic drug under Indian regulations. Now, taking note of all the claims, the Delhi High Court has directed Patanjali to take down the disputed ads.
All right, thank you so much, Nivedana, for getting us all those details. But now shifting focus to some more news updates. Prime Minister Narendra Modi has departed for Trinidad and Tobago after concluding his visit to Ghana. The PM is set to undertake an official visit to the Caribbean nation from July 3rd to 4th as part of his multi-nation diplomatic tour. In a big push for military modernization, the Defence Ministry has cleared 10 capital acquisition projects worth over 1.05 lakh crore rupees. This includes procurement of 12 mine countermeasure vessels for the Indian Navy, costing over 44,000 crore rupees. The approvals aim to bolster India's defence capabilities with a strong focus on indigenous production.
Kenyan reigning world champion D. Gukesh has stunned the world number one Magnus Carlsen yet again at the Grand Chess Tour after 5 straight wins. Last month, Gukesh pulled off a stunning victory against the former world number one in round 6 of the Norway Chess and continued to keep his scorching form intact. And while India's Test captain Shubman Gill has created history at Edgbaston, becoming the first Indian captain to score a double century in England. Gill's maiden double ton marks a new milestone in his career.
All right, on that note, we'll take a very short break on this edition of Market Cafe, but we'll be right back with more on the other side.
happening globally and especially when it comes to news from US. In a razor-thin vote of 218 to 214, the House has passed Trump's colossal tax and spending package, delivering him a major political win just ahead of the 4th of July. Branded the One Big Beautiful Bill, the legislation slashes Medicaid, scraps green energy incentives and makes Trump's 2017 tax cuts permanent. But it will add $3.4 trillion to the national debt. It squeaked through the Senate earlier with Vice President J.D. Vance breaking a tie. All Democrats opposed it and 2 Republicans broke ranks. House Speaker Mike Johnson pulled an all-nighter to secure votes, while Democrat Hakeem Jeffries filibustered with a record-breaking 8-hour speech. Trump will sign it later tonight. And Trump's call with Putin yielded no progress at all as Russia continues its assault on Ukraine. The nearly hour-long conversation came just days after the US paused some weapon shipments to Kyiv, fueling bipartisan concern. Hours later, Russia launched fresh strikes on Kyiv and eastern Ukraine. While Trump urged a ceasefire, Putin insisted on resolving what he called the conflict's root causes. Ukraine's Zelensky hopes to speak with Trump soon, warning that delays in US support could embolden Moscow's aggression. Now to the business front, then Boeing has clinched a $2.8 billion contract from the US Space Force to build 2 next-gen satellites under the Evolved Strategic SATCOM program, with options for 2 more. These satellites will provide ultra-secure, nuclear-hardened communications for the president and top military commanders. Set to launch by 2031, it could scale to $12 billion. Meanwhile, the Space Force scrapped another SATCOM project, shifting focus to faster, lower-risk communications tech amid growing threats in orbit.
US factory orders posted their biggest jump in a decade by 8.2%, driven almost entirely by a boom in aircraft demand. The surge signals a rebound in manufacturing confidence following a weak April. While planes led the charge, other sectors like electronics and machinery showed modest gains. Analysts say the spike is encouraging, but it may be more of a one-off lift than a broad-based boom. Trump is saying tariff letters could start going out today as the US prepares to set new unilateral trade rates ahead of a July 9 deadline. Nations that haven't struck a deal may soon learn what they're going to pay. Trump warned favoring direct action over drawn-out talks. So far, the US has sealed agreements with the UK and Vietnam and paused hostilities with China. Trump says more deals may come, but he's ready to impose tariffs if stalled stocks.
Okay, so that's the roundup coming in and bringing you up to speed on everything that's been happening in the US. But let's just focus back home. And well, the earnings season is just around the corner. We've started receiving a lot of Q1 FY26 updates from banks and NBFCs. And Varun is joining us to give us a roundup on all of those numbers that we received post-market hours yesterday. Varun, morning.
Good morning, Snehi. So let me start with some of the NBFC names and let me start with Bajaj Finance because the overall update has been decent for the company because if you look at the overall AUM that has grown by around 25% in the first quarter of FY26. The company has guided for a 24 to 25% growth in FY26. So that number is in line with what the company has expected. The overall customer franchise has gone up by around 21%, new loans book has gone up by around 23% and deposit growth has been around 15%. Although the AUM and deposit growth has been at multi-quarter low, but it is as per guidance. Now let me tell you about L&T Finance. The overall retail disbursement is up by around 18%. Now this has been aided by the gold finance acquisition that the company has done. Excluding that, the overall retail growth has been 7.7%, although the company has said in its Q4 during its Q4 result that the company is aiming at 20% growth in FY26. So that is almost in line, but yes, that has been aided by the acquisition that the company has done. Now for Bank of Baroda, the overall numbers, if you look at the gross global advances, that has been good by around 12.6%, but the deposit growth on a global level has been around 9.13%, so it has been a tad bit mixed. UCO Bank, the overall advances growth has been 16.6%, overall deposit growth has been 11.6%, but overall CASA ratio has slightly deteriorated from 37.9% on a quarter-on-quarter basis to now 36.9%. So the growth is good, but the CASA ratio has come down. RBL Bank, the overall deposit growth is okay, around 11%, CASA growth has been 11%. But the CASA ratio has been stable for this company. The retail advances has grown by around 7% and 2% on a year-on-year and quarter-on-quarter basis. Within retail, it is a secured retail advances that has shown a good growth of 23%, so that is good. And the unsecured growth, actually unsecured business, has degrown by around 7% on a year-on-year basis. So actually that is good. Bandhan Bank, lastly, the numbers are a little bit weak. The total deposits are up 16%, but the CASA deposit, they are down by around 5.8% YOY and 11.8% on a quarter-on-quarter basis. And the CASA ratio is also down from 31.37% to 27.06% on a quarter-on-quarter basis. So Bandhan Bank, the overall updates that the company has given is actually on a weaker side.
Okay, so mixed updates coming in from the entire banking and NBFC space, but let's just focus to FMCG because we also have updates coming in from Marico yesterday. And well, at the first glance, they look like a good set of updates coming in because the management has said that they are seeing improving trends in rural and urban demand. Urban demand is rather looking stable. They expect gradual growth going ahead on the back of easing inflation, good monsoon and policy stimulus by the government. In terms of financials, they expect the consolidated revenue to grow in low 20s, which is in line with the street estimate, and they expect modest year-on-year operating profit growth as well. In terms of their India business, their underlying volume growth has continued to improve sequentially to reach a multi-quarter high is what they're saying. For Parachute, they are noting a marginal dip in volumes because they've undertaken a notable price hike in June, but they're saying that they're on the path to growth after accounting for the millage changes that they have taken in terms of the pack sizes for Parachute. Let's move from Parachute, talk about Saffola Oils. Revenue growth in the high 20s is what the street is expecting. They've also posted mid-single digit volume growth that is looking very promising for Saffola and they were also able to pass on the benefit of import duty cut to customers. So that is looking positive for the Saffola segment. In terms of VAHO, which is value added hair oils, the segment grew in low double digits, which is better versus what the street was estimating. And they are seeing sustained traction in mid and premium segments. For food and premium personal care as well, they are seeing steady profitability parameters, and international business is expected to see high teen constant currency growth, which is slightly better than estimates. Now, on the back of such a good set of updates coming in, Nuvama has in fact hiked their estimates from the Q1 FY26 earnings for Marico. So that's a big positive coming in, and they retain their buy rating on Marico with a target price of about 815 rupees per share. So that is also looking good. So that's the roundup on Marico's Q1 updates, and the stock is expected to do well in today's trade.
All right, so those are all the Q1 updates that we are tracking this morning. But with that, it's a wrap on this edition of Market Cafe. It's a goodbye from me and Snehi. But don't go anywhere as the market will take all the action forward.